September, you did it again. Us investors lost money. What's going on, y'all? Hope all is well. Another episode of Combos with the CFP Mario Payne in beautiful Jacksonville, Florida. Certified financial planner. Boom. Oh, one way. Got my book though. Y'all see it. Check me out. Amazon bestseller. I'm an international bestseller author. Happy about that. But boom. Also, it's kind of blurry, but as you can see, I was in Forbes in July because they wanted to know my opinion about the second half of the year and what the market's going to do. I know one thing though, September, historically one of the worst months of the stock market, and this year, it did it again. So let's look back at September. It just passed, and as investors, what's some things we can do to make sure the fourth quarter of this year is good? Santa Claus rally, ho, ho, ho. September, no. Oh, I can't see. Anyways, what happened in September?
In the stock market, there's an event called the September effect.
September effect. This is like, Matrix-like, right? Like, got the music, got like, is it an AI voice? Is it a real voice? Epstein. Uh-oh. Should we listen to Epstein? Not a conspiracy theorist, though.
And the impact of it goes back years. In the month of September, on average, the Dow Jones Industrials fall 1.08%, the S&P 500 1.12%, and the NASDAQ.
It's crazy because for my clients, not on these YouTube streets, but my clients, my 900 clients worldwide, we actually got out the market mid-August. Partially because of, yes, the September effect. Also, from a trending standpoint, really since the fourth week of July, the market was trending down. So just to make sure that we preserve profits, because it's painful profits when you lose money. But to preserve our profits, we got out. And man, do I look like a genius right now? Y'all know that answer.
0.85%. History, of course, does not foretell the future, and there can always be exceptions.
Facts. History does not guarantee success, but it does give us a roadmap of what things have done in the past, and that does help.
However, September, unlike August, because so many traders think August is the weak month, that is not the case. It is September, but no one mentions that after September, it's not uncommon for October to start picking up.
Is it secrets that he's trying to give us? Well, the internet saying, you know what? You can't be used no more.
October start picking up, and you go into the end of the year with the Santa Claus effect, which is often a rally.
The Santa Claus rally. All right, Bloomberg, give us some information with your quick take. But here's my quick take as investors. What is something we can profit off of as we're in the index, but get a little bit of juice if the market does that? Santa Claus is coming straight to the, not to the ghetto, but to our pockets as we make some painful profits. Let's look. Where are my profiteers? We're going to look at symbol QLD. This tied to QQQ. So QQQ is an index fund that taps and follows the NASDAQ. Well, QLD is a little bit more juice. Again, as a certified financial planner for my clients, risk is important when investing. My clients, we ain't doing this, but for these YouTube streets, y'all want some extra juice. From a research standpoint, might want to look at this. Basically, it does 2 times the NASDAQ. NASDAQ goes up by 1%, you make 2%. So, if the market goes up by 1%, NASDAQ in particular, you make 2%. It goes up by 10%, you make 15%. On the flip side, if the NASDAQ goes down by 10%, you lose 15%. So risk is involved when things are going up in a positive way, but when it goes down, that hurts as well. So be careful investing in this fund, but it is tied to the index and it does give you some juice if things go up. Things have been down. Look at QLD. Bing! QLD since July Look at that. Down by 17%. NASDAQ around the same time, down by 12%. So when the NASDAQ will lose 12, in here, we're down by 17. But if we're thinking that September and August was the two worst months, and the Santa Claus rally is going to be in effect here pretty soon, might be an opportunity to buy low, because if things get back to where they were and the market recovers from its July high, my profiteers, look at that. That is a 20% gain. Buy when it's down by 17, gets back to where it was, we're at 20. Take it a step further. When the market fully recovers. Now, when will that be? We don't know. Will it be 1 year, 2 years, 3 years from now? I hope it ain't 3 years. Believe you me. But if it does take 3 years for the market to recover, that means this recovers from this all-time, well, not all-time, but it's high. We're looking at a 61% return. It takes 3 years, that's 20% a year. That's doing double than the S&P, because the S&P averages 10%. Again, from a risk standpoint, when things are going down, you are going to lose more. So not recommending people put all that money into this, or even some. You want to talk to a certified financial planner like myself before you make that decision. But my profiteers, investment like that is down more because the NASDAQ, S&P 500, Dow Jones went down in September and August and in July as well, might be an opportunity to buy low. But again, talk to a certified financial planner. But comment below, was we invested in September? Y'all know something we don't know? Is the market going to recover at the end of the year or not? I know one thing, love is love, investing is a journey, making money is a destination though. And let's make some payment profits together, y'all. Peace.
And you just wanna get paid, tired of making the money mistakes. Make a payment on your bills and you still late, yeah. Pay for profits to help you seek change, and you just wanna get paid, yeah. Tired of making no money mistakes. Make a payment on your bills and you still late, pay for profits to help you seek change, yeah. Cut the show and just listen. You wanna feel empowered by making money decisions. Residual by the hours can get you a better living. Bitch at the check, you knowing it could be different, you knowing.